Hi, guys. It's Stock Curry, and welcome to the show. On this channel, we go over the stock market news, and I explain the stock market news in a way that is simple and easy to understand. So what we're going to do in today's live stream is I am going to go over the stock market news for today, and then we are going to go over your stock picks. So whatever you want to talk about, whatever stocks you would like me to analyze, we will go through that, and I will give you my thoughts. Now, let's talk about the video that I uploaded yesterday. So yesterday, I uploaded a video talking about the Poland missile strike. And on this channel, I always try to provide information that is as accurate and truthful as possible for the information that I have at that time. Now, obviously, in a breaking news type of scenario like this, there will always be more information that comes out after my video goes live. So when I recorded that video yesterday, we only knew a few things. We knew that a missile had struck Poland. We knew that 2 Polish civilians had been killed. We also knew that it was a Russian-made rocket, and we also knew that it was fired at around the time that a large number of rockets were being fired by Russia into Ukraine. But that's all we knew at that time. Now, since then, we have gained some additional information. And the additional information we now know is that the missile was actually fired by Ukraine. And it was a part of Ukraine's missile defense system. It looks like 96 rockets in total were fired by Russia into Ukraine. And the Ukraine had to defend itself with these missiles. One of their missile defense systems landed in Poland and killed 2 Polish civilians. Now, as a result of that, Poland, at the emergency meeting with NATO this morning, decided not to invoke Article 4. They had, when I recorded the video, they'd said they weren't going to invoke Article 4. However, by the time the meeting actually took place, they had decided not to invoke Article 4, which means there would most likely not be a response from NATO in regard to this situation. However, it does look like the situation might still escalate, as the Polish president said the Russian side is to blame for this tragic event. So despite the fact that the missile was fired from Ukraine, Poland is still blaming Russia. And NATO also reiterated that statement, with NATO Secretary General saying that this is not Ukraine's fault and Russia bears ultimate responsibility. So I don't know what's going to happen from here. But we do know that this was not Russia and that this actually was Ukraine. However, it looks like blame is still being put on Russia from the West. Now, part of the problem with covering these stories is that there's always going to be a lot of very passionately opinionated people who will have viewpoints on either side. There are those of people who believe that we should just invoke Article 5 and go straight to war. And then there are those people that say all of this is Ukraine's fault. And part of it is just a lot of propaganda from the West, a lot of propaganda from Russia, a lot of misinformation. So I just try to stick to the facts as best as I can. And that's what's going on. Those are the facts. We're not going to take it any further from there. We're just going to move on. As far as the stock market is concerned, those defense stocks were down about 1% today. Obviously, it looks like the issue will not be escalated beyond this at this time. Okay, let's talk about what's going on, politics real fast. So Republicans are now expected to take control of the House. However, they have not yet taken control of the Senate. But just the fact that the Republicans do have control of the House means that the Democrats are no longer in full control. And because they are not in full control, this is essentially what the stock market was supposed to rise on. But we did see the stock market fall today. And I think a lot of that had to do with the earnings. But before we get to earnings, let's talk about the crypto world real fast. As we know, there's a lot of fallout from this FTX collapse and the fraud and everything else that is going on. So in times like this, anytime you have a lot of panic, there are a lot of people, most people, who are trying to get their money off of crypto exchanges at this time. And as they work to get their money off of these crypto exchanges, it has caused extremely excessive volumes for the exchanges. And we are seeing a lot of delays. We're seeing delays on deposits. We're seeing delays on withdrawals. We're seeing delays on transfers. In some cases, we're even seeing some sites go down. It just being their servers being overloaded. And, these are just technology issues. They happen. I remember during the COVID crisis back in March of 2020, a lot of stockbrokers, their sites were going down. You would call in to place a trade and you'd be on hold for over an hour just trying to get a trade placed. You would try to deposit or withdraw funds. There were major delays. These things happen. These are just normal technology issues that occur whenever there's an extremely high volume of trades and withdrawals and deposits taking place. So a lot of people have been very concerned that BlockFi, Genesis, Gemini, Crypto.com, Coinbase, that they are having, that these are signs of some larger major problem, that they might go bankrupt. I personally don't see it that way. Having spent a number of years in technology, having programmed computers for algo trading, having programmed computers for stock market analytics, I have seen technology fail when volume becomes extremely high. I dealt with this a lot myself during 2008 when I worked at Merrill Lynch, and it's just something you got to get through. It will all get resolved once the volume starts to die down. But I personally just see this as a technology issue due to the servers and the manpower not being able to handle the high volume. I don't see this as a larger issue that means every crypto broker is now in trouble. So that's just my take on it. And I still stand by Coinbase and Crypto.com. I still think they're going to be fine. I still want to wait on Crypto.com's audit just to check on that. And when it comes to Coinbase, a lot of people have pointed out they're losing money. They are. We know that. Coinbase has a lot of debt. They do. We know that. But I also know that Coinbase has $5 billion in cash in hand as of the last quarter. We also know that they're burning through $500 million per quarter. And just simple math on that, 5 billion divided by 500 million, it gives them 10 quarters left of cash. So 10 quarters is 2.5 years. It puts them to the end of 2024. I personally don't think they're going to have any problems till the end of 2024. And if crypto doesn't turn around by then and start going back up, and they don't see their volumes and revenue increase by then, because they're a publicly traded company, all they have to do is do a share offering and raise cash. So I personally think they're just fine. Now, obviously, BlockFi is filing for bankruptcy. That's a completely different issue. Same with the Voyager Digital. And obviously, FTX is the new Mt. Gox. But outside of that, I still think Coinbase and Crypto.com are fine. Okay, let's move on to earnings. So Target has warned of a soft holiday quarter as their profit and sales tumbled. This is such a night and day picture to Walmart. A lot of people saw Walmart's great quarter. Yes, revenues were down, obviously. But when it came to Walmart, they had really good guidance going into the holiday season. They had gotten through a lot of their inventory. So a lot of people thought Target was going to be fine too. And they were the complete opposite. It was about as opposite as Intel and AMD. I mean, just completely different stories here. And so despite Walmart having great earnings and sending the stock market up yesterday, Target had terrible earnings, and Target stock was down 13% today. Massive drop for Target stock. The stock market overall continues to trade flat, though. As you can see, Target here up 4% over the past month. So, it's just market has been very, very neutral over the past few months, just trying to understand and figure out everything that's going on, and people trying to figure out where the market's going to be 6 months from now. We have signs of a recession, but the economy is strong right now. Interest rates, it looks like the hikes are going to slow down. I'll talk about that in a minute. But it's just a lot of mixed information right now. So that's why the market's been trading pretty flat for the past couple months. Moving on to NVIDIA earnings, their revenue fell 17%. Their data center growth remains strong. So this would be like your cloud computing. And but still, revenue fall is 17%, not good. Obviously, with higher inflation, a lot fewer people have been ordering computers. So their revenue would be expected to fall. Their stock down about 4.5% today, but then up about 2% after hours. And just taking a look at the last month on NVIDIA, they're still up 33% over the past month. Absolute massive growth for NVIDIA. So don't really worry about a bad earnings. Their stock growth is incredible. And honestly, this might provide a pretty good buying opportunity for you. Let's just take a quick look here. I'm going to pull up Webull and see if we can pull up NVIDIA, see what's going on here. So I'm just going to take a quick look at the financials. Now, this isn't going to have the most recent quarter, but they're still profitable. They're still growing. And just taking a look at their PE ratio is still pretty high at 52. I don't like to see that high of a PE ratio going into what could be a recession, but the stock growth over the past month has been absolutely impressive. And it'll be interesting to see if this can continue or not after earnings. But overall, great stock, great company. They're not going anywhere, but their PE ratio is a little bit high at this time. Okay, let us move on to the Fed. As we know, the Fed has raised interest rates at the fastest pace in history. And the Fed has raised interest rates 0.75% or 75 basis points for each of the last meetings since March. And now there is talk of the Fed slowing down those rate of rate increases, not stopping, not reversing, just slowing down. And the Fed's Waller says he is open to a 0.5 point rate hike at the December meeting. This goes in line with what Jerome Powell said. Jerome Powell said that at the December meeting, coming up here in about a month, that the Fed would either do a 0.5 point rate hike or a 75 basis point rate hike, which would be 0.75%. So more and more Fed presidents are coming out saying they're open to a 0.5 point rate hike. But again, this does not mean that the rate hikes are ending. Fed President Dolly sees that they're going to have to continue to raise rates at least another 1 percentage point before they would even consider pausing. He sees the benchmark overnight lending rate at about 4%. When the Fed last gave their economic summary projection, they had the final rate at around 4.5 to 4.75%. So Fed's daily a little more hawkish here, but all in all, it does look like the rate hikes are going to come to an end soon. And then the Fed plans to maintain that level for some time in order to give the markets time to adjust and react to these increased rates. Now, they will continue to do quantitative tightening. They will continue to sell off bond assets, and that will have the effect of continue to raise rates on the 10-year treasuries as well as mortgage rates. And that will continue to put downward pressure on the mortgage market as well as the treasury market, which in turn will continue to put downward pressure on the stock market. Now, moving on to one last thing, it's channel news. If anything were ever to happen to my YouTube channel, want to make sure that you guys are following me on Rumble. So if you would please just do me a favor and hit a quick subscribe on Rumble just to make sure that you don't miss anything. The Rumble channel, you can find that at rumble.com/stockcurry. That's rumble.com/stockcurry. So please jump over there. I've got about 10,000 subscribers. Make sure you go subscribe in case I ever get kicked off of YouTube for any reason. I will be available on Rumble, and every single video I post is cross-posted on Rumble at this time. And the final thing I wanted to let you know about is that Moomoo has increased their offer. You are the very first person to hear about this. This offer actually starts on the 17th. It actually just started a few minutes ago. I just got word, and I want to show you what that offer is. So if you open an account with Moomoo, you're going to get one free stock just for opening an account. Then because you use my link, you're going to get an additional $10 free. And then you have a choice. You can either deposit $100 and then get 4 free stocks for a total of 5. Or you can deposit $1,000 and get 10 free stocks plus 1 for a total of 11, plus an entry into their sweepstakes where they're giving away $60,000 in prizes. Now, in my mind, this is way better than the promotion they had before. The $100 for 5 free stocks was always there, but now you also get an additional $10 on top of that using my link. And instead of having to deposit $2,500, you only have to deposit $1,000. So that is great. And that's going to get you 11 free stocks plus $10 free for using my link, plus an entry into the sweepstakes for up to $60,000 in prizes. So the $10 is exclusive to Stock Curry channel. If you want to take advantage of that, you can go to stockcurry.vip/Moomoo. That's stockcurry.vip/Moomoo. And one more thing, again, I know that they had to shut down their certain deposits from certain bank accounts. Those deposits they had to shut down were for their bank accounts that had been verified using the too small deposit method. And the problem is they had some fraud going on, so they had to shut that down until they can get that fraud under control. But all of the other deposits work. You can still withdraw using those bank accounts. You just can't deposit. So just use Plaid to sign up, or you can just do a wire transfer. And if you wire transfer more than $1,000, they refund the entire wire transfer fee, including your bank fee. All right. What I'm going to do now is I'm going to go through your comments. I'm going to read through these, and then we're going to talk about your stocks. So whatever stocks you want to talk about, go ahead and put them in the comments. And I'm just going to go through and read through what you guys have to say. So let's start with this one here. Help from Tucson, Arizona. Thank you, William, for your question. Question is, what are your thoughts on Robinhood? Well, as far as Robinhood's ability to stay in business or anything like that, I think Robinhood's fine. Just like Coinbase, they're a publicly traded company. We can very clearly see their financials. I don't think we have any issues with Robinhood. Let me pull them up real fast, and we'll go through the financials for you. So HOOD here. Let's take a look at the financials. Now, Robinhood is not profitable. They never have been, but we can see that their losses are declining, which is a good thing. And what I also want to do real fast, let's go to the cash flow first, see how much cash they're burning through each quarter. So their net cash, let's see, net cash. So we had negative 340 million, 400, negative 1 billion, and negative 200 million. Okay. Let's focus on the last one, negative 200 million. The next thing we need to see is, did they raise any cash? And so we're going to come down here. Oh, back over here. Sorry. Yes. So they, well, $1 million. That's $1 million. That's nothing. It's negligible. So really, it was just their operating income is declining pretty significantly here. So this is actual real losses, 221 million. Let's go to their balance sheet, and let's see. They had 9 billion in cash on hand, and their current liabilities were 17 billion. Whoa. Let's see what's going on there. see, total was 24 billion, total 17. So looks like they got some stuff tied up in, let's see. Okay, so their other, so okay, this is the bank. So other current assets total 10 billion, and then the other current liabilities 11 billion. Most of that will be customer accounts. So really what I want to look at is accounts payable. We got 5 billion and few hundred million here. Call it 5.6 billion. And then if we come up to cash on hand, actual cash is 9.1 billion. So if we do some quick math on that, we'll do the 9.14 billion minus the 5.6 billion in accounts payable gives us 3.54 billion. They burned through 212 million, 16 quarters, 4 years. So yeah, Robinhood is good for another 4 years. They're strong. I'm not concerned about them at all. So my thoughts on Robinhood is they're perfectly fine. They got so much cash on hand. They're going to be just fine. Okay. Let's see what else we got. Target, we already discussed Target in the earnings a little bit. But let's just take a little bit closer look here for you. So on Target, we had, well, the PE ratio is going down. Earnings just dropped. The stock dropped 13% to match. I think Target's trading at a fair value. Now, as far as the technicals are concerned, it looks like they're holding on to this 50-week EMA, which is good for now. They're on the weekly chart. We are holding the 300-week EMA, which is good for now. So overall, I would say very neutral on this stock. I would not do any short-term trading on it, but if you want to do it for like a long-term hold, I think that might be okay. Crypto, yeah, when it comes to crypto, I haven't really looked into crypto coins much lately, so I can't really give an opinion on any altcoins. Tesla, let's go take a look at Tesla for you guys. So my problem with Tesla is that their PE ratio still remains quite high. As you can see, it's a PE of around 50 right now. And, much like NVIDIA, that's fine. If the earnings growth can make up for that. Looks like earnings growth is still doubling year over year despite the slowdown. So given that, a stock doubling year over year, let's see, 100%, 100, yeah. So fundamentally, I think if they can continue to grow at a double per year, that you're looking at a pretty good buy-in price right here. But my only concern would be growth slowing down. That said, look at the technicals on here. We have these two touch points here and here. Now watch what happens if I draw a horizontal line and pop that pretty much right there. And then I'll put that in orange. What color I like my lines. And come all the way over today. And there you go. You get the slight dip below, but for now, kind of sort of hovering above. But here's the problem. Your RSI is still negative, bearish. The MACD is neutral, but all of the EMAs bearish, candles bearish. Despite the fact that Tesla is at a decent valuation here, the technicals are still bearish. So from a fundamental standpoint, I think it's okay to dollar cost average in. From a technical standpoint, I would wait. All right. Let's see. Talked about that and that. Yeah, not getting into the politics of the war much, but it does look like NATO is just itching for a reason to join this fight. I know in the past that NATO said even an accidental missile landing on NATO territory would result in them taking action. But we've also seen that, at least between Russia and the United States, it doesn't look like they want escalation. But we'll see. I don't like the situation, but what can I do? I just sit here and talk about stocks. There you go. I like that solution. Send Chuck Norris. Let's see. My guess of the percent chance we see a deep recession in 23. 95%. How low will the market go? Based upon my analysis, depending upon how deep the recession gets, the market could fall another 45% from current levels. Not saying it will, just that it could. Do I think we're having a Christmas rally? Historically, the answer would be a definitive yes. However, over the past month, the stock market has shown that it is not following the historicals. Normally, during a mid-year election year, we would see the stock market fall going through the end of October and the first week in November, and then rallying after the elections. We haven't seen that at all. We have seen the S&P, the NASDAQ, and the Russell all trade flat, while the Dow just went off and did its own thing and went on this 2-week rally up, what was it, 10-15%. I don't know what got into the Dow. I don't know if it had too much LSD or what, but man, that thing went on its own little rally and just left everybody else behind. So I don't know what's going to happen at this point. Historically, yeah, we're supposed to get a Christmas rally, but I cannot follow the historicals in this market anymore. This market is just crazy. Geez. So Poland thing, USA fall, like I said, NATO nations, they're itching to go to war. Oh yeah, let's talk about that real fast. So Gemini halting the quote unquote earn withdrawal. So that was actually not Gemini's fault. So Gemini went through another bank to handle these this earn bank accounts that they had. And the other bank decided that they were no longer going to do any sort of lending. They're just going to get out of the lending game. And so what they did is they essentially shut down their website so that they wouldn't get any new signups. And now people can't withdraw because the whole system got shut down. Now, over the next couple of days, they are going to bring it back in line for withdrawals only. But that was, again, not Gemini's fault. That was their third-party vendor halting all lending of crypto. But they said they are going to get that back online within the next couple of days so that everybody who has an earn account can get their money out. But the whole program is going away. It's done. There is no longer any earn accounts with Gemini. Those are done and closed and over. Yeah, IWM is the Russell 2000. Let's just go over the market indices real fast. We'll do some quick technical analysis on this. We'll start with the Dow. And this is the daily chart. This is the Dow going on this massive run all by itself. As you're going to see, no other exchange decided to do this, just the Dow. Now, it is rather interesting that the Dow is right at that point where it topped out during the last rally in August, in July and August. So I don't know. Is this the top for the Dow? Are we going to go down from here? Maybe. Right now, all of the technicals are bullish. The only bearish indicator we have is the fact that we're at the same level that we topped out at in August. Now, moving on to the S&P, which I'll go ahead and use SPY for that. We went up, but as you can see, nowhere near the rally the Dow went on. The S&P is pretty bullish. Not quite above the 200 and 300-day EMAs like the Dow is, but still pretty darn bullish. It's above the 10 and 21-day EMAs. We got the 10-day above the 21. We got positive MACD, positive RSI. I mean, this thing is like 95% bullish. So the S&P looks like it wants to continue going higher. Now move on over to the NASDAQ, and it's literally the exact same chart as the S&P. This just hasn't quite gone up as fast as the S&P did. But the only real indication that we have of bearishness on QQQ is this downward trend line. So this is the bottom of the downward trend line. This is the top of it. And we're at that top. So, we might get a bounce downward from here, kind of like DIA is showing. But that's literally the only sign of bearishness. Everything else is bullish. Now, the one thing that we do need to know about is this technical pattern here. This is called a broadening descending wedge. And in technical analysis, a broadening descending wedge is bullish. And it indicates a breakout above this line and then a shoot upward. Now, not up to all-time highs. We're not talking that. We're just talking a big cross upward, maybe up to like this $346 level. So 346 would be a pretty big rise on QQQ. We're talking about a rise of 21% from the current level. And that's what this descending broadening wedge would indicate, is that we're going to have this big breakout to the upside. And that would really fall in line with the December Christmas rally. So right now we're at a breaking point though. We're not there. We're kind of stuck in between all this technical resistance. So if we can break above that technical resistance, yeah, we're going to want a massive rally. But if we bounce here and go down, and maybe that rally comes at some point in the future, then I don't know. It literally, we could go either way. So bullish, but at major resistance. So we're stuck. We're stuck here for a minute. And the last one is IWM. This is the Russell 2000 ETF. And I don't have all my charting on this like I did the others, but the chart's almost identical. We've got the 10-day above the 21-day. We've got the candles above the 21. We've got the MACD bullish. We've got the RSI bullish. It's, again, 95% bullish. But once again, we bounced off of the 300-day EMA. So hitting strong resistance. I don't know. I don't know what's going to happen here. I actually have a bet placed right now that IWM will close Friday at or above $185. I wasn't expecting it to drop over 3% in the last 2 days, but hopefully it turns around and gets back up before Friday. We'll see. But yeah, right now the technicals are very bullish. We're just hitting some very, very strong resistance. So if we can get above this resistance, I think that November-December rally that historically happens after a midterm election, it's going to happen. But we got to get past this resistance level first. Okay, talked about that and that and that. Question: if your far out Amazon put is low risk, why not consider increasing position size? So the reason for that is I have the amount of money that I want to put into it, and I don't want to put any additional money in. That's that. I try to spread my portfolio out to diversify a little bit, and I'm happy with the position size. I don't want to add on to it. That said, I do have a level where I would add on to Amazon, and that is this level here about pretty much like this level right here. So if we start rising back up like close to where we were before that disastrous earnings, I'll probably add on another contract. But unless that happens, I'm pretty happy with what I've got. All right, let's see what else we got. ZIM. Yeah, let's talk about ZIM. So ZIM hit, as you can see, I don't even have to draw a line. It was dropping, and then it hit this massive support level and just refused to get below this support level. And now over the past couple of days, it started to rise. I really, really wanted to add on to ZIM last Friday in the Millionaire Club portfolio. But with the deposits being shut down at Moomoo, I wasn't able to. But I'll probably add on to it next Friday when I do my next buy. But this PE ratio right now is literally 0.5. Now, being that this is a shipping company, we really want to look at book value. Any book value below 1 is considered undervalued. And ZIM currently has a book value of 0.6. So ZIM right now is about 38% undervalued. So plenty of upside potential. You know, this should be a $40 stock. So I'm pretty happy with the ZIM holdings at this time, and I do plan to add on. And thank you for subscribing on Rumble, Daniel. I really appreciate it. Froggy, I know you're not on Rumble yet, but man, get on there because a lot of YouTubers are getting canceled and they're all switching over to Rumble where we can say whatever we want to say. On this platform, I've got to be very careful. But Rumble, yeah, we're free to speak our mind. So definitely get on Rumble. Get a lot of good information there. Is Moomoo credited? They are licensed. Yes, they are actually a U.S. company. They are licensed by the SEC and FINRA. Why are they so eager? Well, they are a brand new company, at least new to the U.S. They're not a new company, but they are new to the U.S. And they're trying to grow market share. That's literally the reason. So any company that's trying to grow market share, they're going to go all out and give you guys a ton of free stocks, a ton of free money to join the platform. And that's why they're so eager. So take advantage. Free money, free stocks. I'm just trying to help you guys out. AMC. Yeah, I knew this was going to come up. Should have prepared better for it. By the way, let me know in the comments if you guys like these live streams. If these are helpful for you guys. I enjoy doing them. Haven't done one in a few months. Let's see what we got for AMC. Oh, by the way, while I am researching this, let me pull up something real fast for you. So on my website, stockcurry.vip, if you scroll to the very bottom of this website, there's a purple button here that says sign up for giveaways. Make sure you go and sign up for giveaways because at the end of the year, I always do a giveaway on a live stream, and I have a lot of really good stuff to give away this year. I've got a bunch of different merch, and I also have, let's see, I've got a Blink doorbell, one of those camera doorbells that I'm going to be giving away. I've got all kinds of cool stuff that I'm giving away this year. So make sure you go sign up for giveaways at stockcurry.vip. and get in on the contest. That'll be in about 1 month. I always do that every December. We'll do a bunch of Christmas giveaways and just have a lot of fun on the live stream. Okay, let's get back to your question, which was AMC. So I don't know. Should I even bother going over the fundamentals? Of course not, because AMC is not a fundamental play. Never has been, never will be. AMC is strictly a MOAS, mother of all short squeeze plays. Now, there are some who believe that short squeeze already happened. The data would tell you otherwise. What I'm going to do is pull up ortex.com, and then I'll bring this over to you, and we'll go over the data. But as of right now, I just want to go over some of their financials, because one of the biggest concerns on AMC has always been raising more cash, which would cause the stock price to go down. So I just want to point out that they currently have in cash $684 million. And if you go to the cash flow, they were burning through about $200 million a quarter. Now, that only leaves them with what, 3/4 of cash on hand? No, 2/4 of cash on hand. So they're going to need to raise funds here pretty soon. Now, could that be a share offering at AMC? No, because voters have not approved it. So you can't do a share offering at AMC. It has not been approved by voters. So guess what? Because you can't do a share offering at AMC, oh my gosh, I guess Ortex has got this thing and I can't get past it. Okay. So because it has not been approved, any share offering that goes through is going to be done through ticker symbol APE, which is AMC Preferred Equity Shares, or APE. And this is the one that they would do the share offering on. So APE shares would go down, they'd sell off. But the AMC shares should be okay. And if anything, if they raise funds with APE shares, AMC shares should rise. Now, let's go ahead and pull up Ortex here and take a look at what's going on with the short data. First thing we will notice is that utilization on this yellow line here, has been all year and remains to be at 100% utilization. Now, there's a lot of misunderstanding around utilization. A lot of people think utilization means that is the number of shares that have actually been shorted, and that actually is not the case. Utilization simply means that all of the shares that have been available to borrow have been borrowed. It does not mean that those shares that are being borrowed have actually been used to short the stock. So it's very possible that some firms are actually holding on to shares and waiting to short, but they haven't actually shorted yet. So I just want to explain utilization there for a minute. That said, we can see the percent of free float on loan, 35%, short interest percent of free float, 20%. But in my mind, those numbers are meaningless. What really is important are two numbers: the utilization, currently at 100%, which means there's no more shares available to borrow, and the days to cover, 5 days to cover. What this means is that if there were a short squeeze, actually 5.85 days, it would take almost 6 days of buying before that short squeeze were to end. Or at the very least, it would be 6 days worth of average volume before the short squeeze were to end. And let me tell you, a 6 days to cover is massive. We could be talking about a massive short squeeze on AMC if it actually does occur. Short squeeze score on Fintel is currently 74, which is 965 out of the 5,000 stocks that they are looking at. However, the gamma squeeze score is currently 96, which means we are in a pretty good position to have a gamma squeeze come Friday, because Friday is the monthly options expiration day. And with Friday being the monthly options expiration day, if the share price were to rise between now and Friday, market makers would be forced to buy AMC stock in order to cover the call options that have been bought on AMC. And their buying could trigger the stock to go up more, which in theory could cause a short squeeze, but more likely we'd get a gamma squeeze where the AMC share price would rise tremendously through the end of Friday, and then it might sell off starting on Monday. As we can see on Fintel, just verifying the number of shares available to borrow, bouncing between 0 and 250 or 300,000 shares. But the real question always on any stock where you have 100% utilization is whether or not we have a lot of failure to delivers, which would show a lot of market manipulation occurring. And so if we scroll down to the failure to delivers, they are massively high. The lowest they have been in the last month was 500,000. The highest they have been in the last month was almost 10 million. This is insane. This is a very strong indicator that there continues to be massive market manipulation on AMC. It's a very strong indicator that companies are doing things. So I don't know if I really need to go into great detail with you guys. I spent a lot of time when I worked at Merrill Lynch and Morgan Stanley. The department that I worked in was the securities lending department. Securities lending is essentially how companies will borrow shares and also how companies lend out those shares to be borrowed. It's called securities lending or sec lend, but the also known as stock loan. But the thing about it is I could go in all day long. I could literally do an hour live long stream just talking about all the different ways that you can manipulate and do way more than 100% utilization on short selling. I'm not going to get into all that in this video. I don't have time. I will just say that the failure to delivers are a very strong indicator that that manipulation continues to occur and that more shares are being shorted than are actually available to borrow. I'm just going to leave it at that. Okay, let us move on and see if we can get through a few more stocks. Try to keep these to about an hour, so I've only got about 13 minutes left. What I'm going to do is just go a little bit faster and see if there's any that more than one person has been asking about. And if we can find some stocks where more than one person's been asking about them, then we will go ahead and talk about those. It looks like a lot of the ones that you guys are asking about have the question has already been answered. So let us continue here. Let's see. Wow, we talked about a lot already. It's like you guys have a couple questions about Twitter and Tesla and Elon Musk. So let's talk about this real fast. Elon sold more Tesla. Yes, he did. We do know that. Am I looking at puts on Tesla? No. The problem with Tesla is fundamentally it's at a good price. It's just technically it's going down. Whenever Tesla does in fact bounce and start going back up, it could rally pretty hard and pretty fast. Dr. Burry's still shorting them. Maybe. The problem with data that we get from the SEC filings is always delayed. Usually, we don't even know that somebody entered a position until they're already out of it. So anytime you see a filing that shows somebody has entered a position, take it with a grain of salt because your information is already old just based upon the filing dates that the SEC requires. All right, let's see what else we got here. Yeah, one person giving the same stock 8 times doesn't count. I need more than one person. Okay, let's see. Webull, is your money safe in Webull? And another question. Why can you buy warrants on Moomoo, not Webull? Well, Actually, you can buy warrants on both. It just depends upon the stock or the ticker. Each broker will decide whether or not to offer warrants. Those warrants are not always going to be made available to every broker, but generally you will be able to buy warrants on both. Now, the question about is your money safe in Webull? I personally believe it is. I have not seen any indication that Webull is doing anything funny, but the problem with Webull is that they are not public. We don't know, right? Like Moomoo is a public company. I'll pull up their ticker for you. It's FUTU, Futu. This is Moomoo's trading symbol. They're a public company. We can look into their financials. We know what's going on. We know they're safe. That's not true with Webull. So I don't know if our money is safe in Webull or not. I personally think it is. I haven't seen any indication to show it's not, but I don't know. I'm pretty confident that our money is safe in Moomoo because I can see their financials publicly. But Webull, I don't know. All right, let us continue onward. Saying, yes, live stream is awesome. Thank you, Ellie. You were saying more live streams. Thank you, Omar. And you're saying you love this. Thanks. Okay. Appreciate it, guys. Yeah, appreciate it very much. Good question. Yes, Moomoo's parent company, China. It's actually Hong Kong, but, you know, I guess depending upon your politics, you could say that's the same thing. Yeah, the parent company is in Hong Kong, but the U.S. arm is technically a separate company. This isn't like, it's not like Webull, where the company is literally in China and the platform is open to the U.S. and to U.S. regulators. Moomoo actually has a separate U.S. company based out of San Francisco, I believe, or is it Silicon Valley? Somewhere in California. Anyway, they have a separate company that is based out of California. So it's being a completely separate company. I feel like it's quite a bit safer than somebody like Webull that is just operating in the U.S. All right, let's see what else we got. Sure, why not? You know what? This is the biggest joke in the stock market right now. DWAC. So DWAC never has and never will trade on the fundamentals. It is purely a play on Trump. If you love Trump, you buy it. You don't like it, you go, whatever, right? Like the whole Truth Social network has been a complete disaster, which I'm not surprised. I said that when DWAC first came out. You guys can go search my YouTube videos. Go look up the first DWAC video I made, and I hated it. And DWAC ran up to $100. I thought it was stupid. I knew it would come back down. Came all the way back down to $16. All the haters disappeared. I knew this was going to happen. It runs up in the past couple of days because Trump announces he's going to run in 2024. And then it comes down in the last 2 days because, one, it was buy the hype, sell the news. But two, I can't remember. I saw some news on it, but somebody on the board got fired or something. And now there's questions whether this merger is ever going to go through. I don't know. The whole thing is a complete cluster. Like, I'm still not going to touch it. Anyway, moving on. Live stream Sunday through Thursday night. Yeah, no. These take a lot of work. I do want to start doing some more live streams. I do. And by the way, guys, if you guys like live trading, like not just talking, but like while the market's actually open, live trading, there was actually on my, WeProfitDayandNight.com. I've got a new coaching program. So let me just put this into here for you guys so you can see it. All right, let me add that real fast. Pop that up on here. So I'll pull this up so you guys can see it. And what we're doing in there is we've got live trading that is happening in the WeProfitDayAndNight.com coaching program. This is the old VIP Discord, if you guys recall that. But we've expanded it now, and we're doing beyond just the actual Discord community. We've also got classes in there, and then coaching from some pretty amazing traders who are just killing it with their trades. And they are doing live streaming of their trades, showing you exactly how they're making money live. So if you're interested in the live streaming and you want some of that, daytime live streaming, and you want to learn how to do especially multi-leg options, I hired some professional options traders. These guys make over 6 figures a year trading, and they are teaching people how to trade options. So, if you want to get on that and just learn from these professional options traders that I have hired to teach you, you can go to WeProfitDayAndNight.com, schedule a call with one of my onboarding specialists, and then kind of go through the program and tell you what it's all about. Okay, let's move on to your chat again. I talked about that. Let's see if there's anything else. Okay, we're kind of near the end. We're running about 3 minutes left. So let's see. Yeah, okay, kind of an interesting question here. Thoughts on holiday retail numbers? Do you feel if Black Friday numbers are weak, it starts a new downtrend in the market? Do you see new lows for the S&P? Yes. So my personal belief, and I don't know what the market's going to do, because like I said, this market's been crazy, but if the market reacts like it normally does, I would expect it to rally in December, especially. I would expect it to go up right through Christmas, and then I would expect it to start dropping. Black Friday is coming up in a week. And for those of you guys who are not in the United States, Black Friday is on November 25th. By the way, the stock market is closed on November 24th. And I believe we have a half day on November 25th, if I recall correctly. So let me see if I can pull that up real fast. Here we go. So Thanksgiving Day, it is closed. But we do have a half day on the 25th. So what if the Black Friday numbers come in low, what would that mean? Gosh, it's really hard to say. What should the market do? The market should sell off. What will the market do? I don't know. This has been a very difficult market to predict. It probably rise. It would probably rise. I don't know. But I don't think we're gonna drop below and get to a new 52-week low until next year. Could be wrong, but I don't think we're gonna hit new 52-week lows till next year. By the way, one more thing about the end of the year. So the very last day of the year, the very last trading day of the year, the stock market usually has a major sell-off. Like you could pretty much just buy a put option and make money every single year on the last day of the year. But the reason that the stock market has a major sell-off on the last day of the year is because companies make a lot of money, mutual funds and all these other companies will make a lot of money. And then the last day of the year, they will do a lot of selling of their losers in order to lower their taxes that they have to pay. This year might be a little bit different because with the market down as much as it is, there are very few people who are making money in this market. I know myself and our coaches in the Discord and a lot of people in the Discord are making money with our coaching program, but I know a lot of people are not. So if you're trading, you could probably make money in a market like this. But for all the buy and hold people, they've lost money this year. So I don't know if there going to be a need to actually do that last day of the year sell-off for to lower taxes. We may not have that normal last day of the year sell-off like we normally do. So just be careful. You're going to hear a lot of people talking about the last day of the year, the stock market goes down by put options. But again, I don't know if that's going to happen this year because I don't think the need to lower tax rates is there. Okay. You know what? We're at 1 hour, so we're going to go ahead and end it here. I appreciate everybody who has joined this live stream, and I thank you all for tuning in. And if you guys have any other questions, we can continue the conversation over in the Discord community as part of the coaching program. And I will see you guys later. Hope you guys have a lot of success trading. Make sure you share this video with your friends and family so that they will know what's going on in the market as well. And don't forget to hit the like button.